Today is the 26th of July, 2010. This is today's silver log. And silver up today about 6 cents on SLV. And I was asked why I'm using this ETF other than the XSLV available. And the reason for that is because I can get intraday movements within SLV. The 1 minute, 5 minute, 30-minute, hour chart and data is available where it's not available on XSLV. And one of the interesting little tools that you can come up with is that of the volume weighted average price, which indicates this orange line. And today it had some resistance towards the VWAP. It fell below it to a low, which we'll see was a big level of support that was successful. Came up to the VWAP in the late morning, got above it, and it stayed above the VWAP for the rest of the day. And well, it seems that silver for the afternoon session pretty much just goes through these range-bound markets anyway. On the 10-minute time frame, the VWAP is a little annoying because it only represents for the day. I will show you in this video how to use it for longer period of time frames, at least how to use it on a spreadsheet. I will be going through that in a little bit, but for now, what I want to focus on is this Fibonacci here. What you do is you connect the top, in which was resistance here at roughly at around 1752, and this low on the 19th of July, and the 161 comes right up to this level of 1780 where it is at right now. Right on this level is where it has found the level of resistance. And the next level is at about 1823 if it is able to break away from it. And there's the 1823 in here. And the next Fibonacci level after that coincides with this trend line, which we'll talk about a little later on. But for now, it seems as if this is a bear flag kind of scenario, and it's been about 3 days where it has now ranged through time since it's had this big move to the upside. And the longer the range is, the bigger the move can be, breaking it either towards the upside or to the downside. Now, as far as downside support is concerned, this is the key Fibonacci level. Now, in the hourly time frame, you got the rising 5-day and the rising 10-day moving average, which are areas of support. The 5-day moving average and the 10 are both above this key 1757 Fibonacci level that we can see right in here. But the first Fibonacci level is actually the 23.6. And today, that level, we'll have to use a 76.4 for the top part. We can see that this level of 1768 hit right on today's bottom. The support level was amazing for today on the 1 minute time frame. And so that's the key levels of support for the silver as far as any type of trend lines are concerned. Just quickly looking at this now, I would have to assume that we can use a trend line somewhere in that area here, which means that if we stay in this range, it's obviously going to break any of the uptrend lines, but at the same point, it can also take out some of the downtrend lines too. And the significant one that I was seeing today is this one in here, which connects the top from the 17th of May along with this resistance point, this level, and this level. It has pretty much broke it, but in reality, it's also pretty much on the level. And if it continues to correct through time, it's obviously going to be breaking this particular trend line. The Fibonacci from the big high and the big low from the time frame of this, the intermediate chart has us right at this first Fibonacci level here, roughly 1777-ish, which is where we are at now, and it's been holding this level for quite some time, enough where it's had enough time to break out upwards to this next Fibonacci level of 1841. You also have a level roughly at around 1810, which has had some significant support and resistance along the way. And then that 18 level that I was talking about as a huge level. A lot of those averages were working to 18, but they're now sloping lower because of the selling that this market has had. Now, the volume weighted average price that I want to see is from this level on the 13th of May. What you need to do to have this data is you need to have the volume and you need to have the price. For it takes the price as far as a regular running average, but uses volume as a weighting tool. So what you need to do is export the data from free stock charts. You would click on this button here. You need the price history and you need the volume, and you can click on the export data, which I have already done. And you get the text document, select everything in there. You can copy what is needed, and then on your spreadsheet, paste it onto your spreadsheet. Now I want this on cell 1. And paste what you want on there. Click on the comma button so it goes in its selected columns. So now what we need to do is find the 1944 level, which would be at the time frame of May the 13th. So what we'll do is we'll look for May the 13th, and here we are. There's a 1944. So to get the volume weighted price, we need the sum of the prices in volume. So we're going to take the volume here and we'll multiply it by the final price of 1929. And we can take this and we can copy this all the way down to the bottom. So it takes the total price, that is the volume, multiplied by the price. Now what we're going to need are running totals. We're going to need the running total for not only this price here, but a running total for the volume. So to do a running total, what we need to do is we need to do the sum. Now this is for this column in here. We need to do a sum for both of these. And within a spreadsheet, because we're doing a running total, you need to put a $sign beside the letter and the number, and that will give you a running sum. And this would be a sum of the volume, so we'll put a sum in here. And the same thing is true. We need a $sign beside the number and the letter. And to calculate what the average price is, we take this level and we divide it by this one here. And what we'll do is we'll just make some of these levels smaller. And now we can just copy and paste to the way lower. And we'll copy and paste. And right now we are at 1778, and the volume weighted price is at 1792. So we can take a look at this chart. What I'll do is I'll put the data in for this time frame, and we'll make a little chart. We'll take sections J and K, which would have the VWAP and the price history. So we'll make a chart on the spreadsheet. We are obviously below that weighted average, but it's getting very close. And now we got a little chart here, and we just make the chart a bit bigger. And what we're seeing is how this VWAP has been an interesting level of resistance and support. So since this market has broken lower, the average participant who has bought in silver since this May high is now at a losing position right now, but just barely, and it's the average person at that. For this level has been resistance in this level here. It was support, support. It's broken down. It's had one resistance test, and it looks like another resistance test will be there. So if we make the breakout on silver above this key resistance, it's going to make it past that significant volume weighted average price, which I think is an important piece of information. Now we're going to look at the longer term time frame, in particular the daily chart. And what I'm seeing here is an ascending triangle. That is intuition, which is the areas that cover the significant lows from the bottom in April of '09, the bottom in July of '09, the bottom in February of '10, and this level here, which means that this comes to tuition, or this ends pretty much at the end of the year, and you'd expect it's going to break it either to the upside or the downside. Usually these patterns result themselves in the current trend. Right now the current trend is that for higher right now. So that's an interesting little chart. Now as far as the Fibonacci is concerned on the daily time frame within this significant low and high, we can connect this high within this low and see that we are holding above the 61.8% Fibonacci level. Therefore, it is slightly or cautiously bullish. To get past the cautious or slightly, we need to get above the 76.4, and that level is roughly on at about 1822 on SLV, and it's a little over 2% more as far as what the COMEX price happens to be. And these moving averages, you have the 50-day moving average with the 200 and the 100 right in this little sandwich, which is showing us more signs of indecision, and that's normal when you have this sort of range-bound market like we are having right now at this given time frame. So thank you. Well, thank you all for watching this video, and have yourself a great day. Bye-bye, everyone.